and welcome to TAJ's panel discussion on the special consumption tax on non-alcoholic sweetened beverages. My name is Shanice Lindsay and I'll be your moderator for this session. After the imposition of the special consumption tax on non-alcoholic sweetened beverages, TAJ had a webinar, and after that webinar we received a tremendous volume of questions. Our goal today is to answer these questions, provide clarity, provide certainty using examples and practical scenarios to provide you, our viewers, with guidance on how to proceed. We are here to ensure that you are able to comply easily and efficiently. You will leave here today knowing exactly what applies to your business and what exactly you need to do to ensure that you are compliant to meet our deadline of May 15th, 2026, which is when the license period grace ends. Now, just a reminder, you are given grace to do your licensing for the regime up to May 15th, 2026, which is tomorrow. At the end of that period, the grace has ended. It is therefore important that after you leave here today, you ensure you have all the information you need in order to complete your licensing. To ensure that you have the answers to all of your questions, we have our notable panel here. Let me introduce them to you and indicate what areas they will be focusing on. Our first panelist is Ms. Kelsey Reynolds. She is the Acting Director of Tax Policy and Review at the Ministry of Finance and the Public Service.
Good morning.
And then we have Ms. Sandra Price, who's the Assistant Senior Technical Specialist here at TAJ.
Good morning. Good morning.
Their job today, and mine, will be to ensure that you know all you need to know in order to be able to be licensed for this regime. I say again, the focus of this panel discussion will be on licensing and some policy matters for you to understand what the regime requires of you. In subsequent sensitization sessions, TAJ will advise you what is required for other areas of compliance. However, we are mindful of the deadline tomorrow, and so our focus for today will be on licensing. We have a Q&A session at the beginning, at the middle, and at the end of this panel discussion, where you'll be able to ask any questions that you have. I wish to advise the questions that we'll be taking for today are those questions in relation to the licensing. For any other question, we will take them in subsequent interactions. So, with that said, let me set the baseline. Why are we here? May 1st, 2026, the government of Jamaica imposed a special consumption tax on non-alcoholic sweetened beverages. Those beverages are beverages that have an alcohol content of 0.5% alcohol by volume or less. This was a specific tax, not an ad valorem tax. It applies to manufacturers and importers of commercially produced, packaged, sealed, non-alcoholic sweetened beverages containing added sugar. The effective date is May 1, 2026, and this is when the liability arises. Please note, liability is triggered at the point of removal from the factory or warehouse, not at the point of manufacture. It is important, therefore, that you be mindful of what dates the goods are leaving the warehouse. Additionally, it should be noted that the tax is not self-assessed. It is determined at the point of removal, and it only applies to juices with added sweetening content. We will focus on specifically beverages that are within scope. Please note that means that there are some beverages that are not in scope. We will be talking about liquid milk, exported goods, beverages sweetened at the point of sale. Those classifications will be explored further in our chat today. So, let me lead now to our presenters. Let us start with understanding the policy context. Why this regime? How did it begin? And what is the intent? To answer these questions, Ms. Reynolds from the Ministry will assist us.
Good morning again, Ms. Lindsay. Good morning again to you, our viewers. So what I will be doing is providing further policy context as it relates to the special consumption tax on non-alcoholic sweetened beverages. Earlier this year, the Honorable Minister of Finance and the Public Service, Minister Favour Williams, would have announced a set of revenue measures for the 2026-2027 fiscal year. These measures are intended to address various fiscal gaps, for example, various economic pressures that we are experiencing internationally. For example, spiking oil prices, as well as the catastrophes we have been experiencing. Late last year, for example, we would have experienced Hurricane Melissa that would have done tremendous damage to various infrastructures as well as displaced many livelihoods. So as such, these revenue measures that includes the SCT on the NASBs are intended to address these recovery efforts. So one of the pending questions that we would have gotten is why this particular measure? Why was this contemplated in comparison to other policy measures? So first and foremost, to you, our viewers, it is intended, or what you need to know is that we already have in place the GOJ in relation with the Ministry of Finance and our relative agencies already have a SCT regime in place. And what we wanted to do was to design or create a comparable framework to capture these beverages that are consumed at a high rate without burdening our taxpayers as well as our stakeholders alike. So what I would like to emphasize at this point is that this is indeed a revenue mobilization effort. Please note that we're still in our recovery period, and as such, these measures are intended to facilitate recovery efforts at this time. So for clarity, what I will be saying is that the NASBs, right, these particular beverages that are in scope are those beverages that are less than 0.5% alcohol by volume. They are commercially packaged and produced, and most importantly, they are directed for human consumption. Earlier, my colleague, Ms. Lindsay, would have touched on some of the exemptions under this regime, so I'm just going to emphasize some more. So these are liquid whole or skimmed milk. These are exported sweetened, non-alcoholic sweetened beverages, or those shipped as stores, syrups, concentrates, powdered mixes, as well as 100% natural juice without any added sweetened content. So just to reiterate, those are the exemptions that are under this scope. Lastly, before I close my segment, it is important to note that the Honorable Minister of Finance has given a directive, and currently the regime is under review. Thank you.
Thank you, Ms. Reynolds. Well, that clarified a lot for us, and I hope it clarified it to you, our viewers. Please be reminded, the purpose of the policy is revenue mobilization. The goal is to provide a consumption-based tax comparable to the existing special consumption tax regimes that already exist on alcohol and tobacco. Please be advised, viewers, that the regime is administered by two pieces of legislation. There's the Excise Duty Act, which governs administration and licensing, and the General Consumption Tax Act, which treats with registration as well as listing the prescribed goods and the rates. This is very important for you, our viewers, to consider, because the first step as being part of this regime is to ensure that you are compliant with your licensing obligations. Here at TAJ, our role is to ensure that we administer this regime fairly and consistently. We do not intend to penalize compliance-ready businesses, but to support them in meeting their obligations. To this end, we want to clarify what is required of you in order to meet the licensing obligation. Ms. Price will be able to give us further information. And so, Ms. Price, our viewers have been asking. There are two types of manufacturers that are within the field as it is now. One, they're the existing manufacturers who would have been licensed and registered for special consumption tax prior to the regime. Right. And then there are the new manufacturers who would have been producing beverages but had not previously been required to do any licensing and registration. For our viewers, tell us, as an existing manufacturer, what are the expectations?
Thank you. Good morning again, viewers. So let me start by pointing out that all manufacturers of NASBs are required to be registered for both GCT and SCT. Now, registration is accomplished by completing Form 1. This Form 1 is known as an application for registration for GCT. When that form is completed and is being submitted, it is to be accompanied by a list of all NASB's products that you intend on manufacturing. Having been registered, you are now ready to make an application for licensing to manufacture NASBs. there are three requirements or a three-step process in making the request for the license. Firstly, a letter of intent is required. That letter actually initiates the licensing process. There is no standard format that is prescribed by the legislation. So as have been mentioned before, you will be required to consult with TAJ to ensure that that letter of intent captures all material facts. Secondly, there's a licensing fee of $5,000 that is required to be paid, which can be paid at any of our tax offices. And thirdly, you're required to complete a Form 2. This is an application to be licensed as a manufacturer of prescribed goods, in this instance, NASBs. Having completed these three steps, there are certain conditions for licensing that I must bring to your attention. One, an approved factory premise is required. The manufacturer is required to be compliant with inspection, security, and record-keeping requirements under the legislation. Thirdly, maintenance of approved system for measuring and recording production and removal of these prescribed goods, as well as the NASB in this instance. Now, licensing is conditional upon a site inspection and compliance with excise controls. However, in this instance, we have a fast-track approach simply to assist you, our manufacturers, because we recognize it is new, and we know that change sometimes results in a little pressure and stress. And so to make the process seamless, we have designed a fast-track approach wherein you are required to submit your letter of intent, a copy of the receipt proving the payment of the license of $5,000, and the Form E2, which is the application to manufacture prescribed goods. Those can be submitted via email to exciseregistration@taj.gov.jm. Once this is done, your application for licenses will be processed within 5 to 10 working days and be delivered to you.
Now, let us go over that process again. Step 1, complete Form 1. 2, pay the relevant fees. 3, complete Form 2. 3, Form 2. E2, let me make sure we got the reference correctly. Complete Form E2, and then ensure your process is fit for the purpose. Ensure your premises are fit for the purpose. Let me reiterate. Ensure your premises are fit for the process.
And if I may just add, in the fast track process, that aspect of it will be somewhat delayed. So there will be a mutually agreed time with TAJ and the manufacturers to address that aspect. Or as has been pointed out, the policy is also being reviewed. So as we proceed, we will get better details or clearer details as to how we proceed.
Thank you very much, Ms. Price. Now, our viewers, you are reminded, please engage TAJ as soon as possible to ensure that you are compliant with this process. We are making all reasonable steps to ensure that the compliance is easy. However, you need to do your part to ensure that you are able to meet that May 15th deadline. So remember, engage TAJ. You can engage with the fast track process and start your registration so that you are compliant. Thank you, Ms. Price. Now that we have clarified the application process, please tell us about the licensing timelines.
All right. So, as Ms. Lindsay has pointed out, the policy, the regime came into effect on May 1. However, extension was granted to May 15 to allow for licensing. So you actually have 1 business day to go to complete the licensing process. Now, for existing manufacturers, meaning those manufacturers who were duly licensed, registered and licensed and producing prescribed goods as at May 1, 2026, you will be required to account for SCT on NASBs produced or in storage as at May 1, 2026. Additionally, you will be required to submit a letter of intent indicating that you intend to manufacture NASBs. This letter of intent will be used to update your current license. So that is for existing manufacturer. If you were in the process of manufacturing excise-able goods as at May 1, you will be required to submit a letter of intent stating that you are about or you desire to manufacture NASBs. That letter of intent will be utilized to update your license. And take note, please be reminded that you will be required to account for the SCT on these goods commencing May 1. Now, those of you who are new to the regime, you were not previously manufacturing prescribed goods, and so you would not have been duly licensed prior to May 1. For you, as soon as the license has been issued, then you will be required to account for the SCT on the prescribed goods, or in this instance as NASBs, because that's the set of products that we are talking about. However, if it is that you make changes to your prices on NASBs as at May 1, then you will be required to account for the SCTs on those goods effective May 1. Notwithstanding that you have not been duly registered or licensed, you will still be required to account for the SCT, as you would have modified your prices to take account of the change in the tax. Also, as was identified or announced previously, there is a grace period to May 15th, that is tomorrow, Friday, May 15th, for licensing, registration and licensing. If you fail to utilize this grace period, then after May 15th, you will still be liable to SCT and hence required to account for SCT effective May 1, 2026. So if you fail to take advantage of this grace period, you will be required to account for the SCT starting May 1, 2026.
Thank you, Ms. Price. Let me take two questions which have been posed. The first question I have here is, for goods manufactured in March and are still in storage, do they attract SCT?
If they were manufactured in March and in storage as at May 1 or taken out at May 1 for local consumption, yes, they will attract SCT.
So for clarity, when the goods are removed from the factory on or after May 1, then the SCT liability would arise. The date of manufacture does not determine the liability. The date of removal does. Second question that was posed. If I'm licensed on May 18th, that's 3 days after the license period, when does my June return cover?
All right, so June, and let me clarify. So for those who are new to this regime, the filing for SCT is done on a monthly basis. So for example, if you are filing for the month of May, that return is due in the following month, which is the end of June. Now, we said earlier that grace was given to register, license, or effect. Let me repeat that. A grace period was given to facilitate licensing, which expires on May 15th. However, if you fail to take advantage of that grace period and license May 18th, you will be required to account for SCT commencing May 1. So your return for June will cover the period, or should cover the period, May 1 to May 31st.
All right, viewers, I hope that is made very clear. The grace period allows your time for allows you time for licensing. If it is you have not utilized the grace period and you opt to engage in the licensing process afterwards, when you are filing your June return, you are required to account from May 1 to May 31st. Therefore, we're imploring you, please, utilize the resources that are available to you, utilize the grace that is being extended to you. In respect of all our existing manufacturers, if you are already licensed and registered and have been producing SCT relevant goods, then for you, May 1, 2026 to May 31st, 2026 is your applicable period. I hope that clarifies it for our viewers. If you need further and better particulars, please feel free to use the Q&A function. We were also provided with scenarios, so let us try one of those. The scenario that was given is this. A manufacturer produces 10,000 units of sweetened juice in March of 2026. On May 1, 2026, they remove 3,000 units from their warehouse for delivery to a retailer. The question then is, as an existing manufacturer, when does the SCT apply? And then as a new manufacturer, when does the SCT apply? Ms. Price?
So just to bring back to our memory, the existing manufacturer is that manufacturer that would have been manufacturing prescribed goods prior to May 1. So that manufacturer, any prescribed goods that is sold after May 1 is excisable, meaning it attracts the SCT. And so that 3,000 units will be subjected to SCT. The manufacturer will be required to account for SCT on those 3,000 units. Now for the new manufacturer, that is the manufacturer who was not previously manufacturing prescribed goods, so they are now new to this regime and would not have been registered or duly licensed, so they would not have been officially authorized to be producing prescribed products, and so they would have no authority to be charging SCT, and so no SCT would be required. But please note, if your prices were amended to account for the policy regime, that is the application of the SCT and the NASBs, you are required to account for same.
Thank you very much, Ms. Price. I hope that is very clear to our viewers. If you change the prices to account for the special consumption tax on the NASBs, you are required by law to account for it same in relation to your filing. That is very important. Regardless of whether you have been licensed and registered, if you have charged the amount, you're required to remit same to the government. Thank you. Now, having gone through the scenario, I would like to provide some answers to some other questions that were raised based on our last webinar. After that webinar, we were told that there are many questions that our stakeholders have, and we're inviting our stakeholders at this opportunity to please enter your questions in the chat while we deal with the most common ones from the earlier session. We will only be touching 4 of those questions here, and we will be opening the Q&A to allow persons to give us answers. Let us be clear, you will be putting your answers in the Q&A function, and we will be taking those answers and providing it to the team, depending on how much time that we have. So let's be clear with that. I'm going to be doing 4 priority questions that were repeated, and then I'll be looking at the Q&A to find questions that are being posed and provide answers to those questions. So the first question, Ms. Reynolds, does SCT apply to exports?
So no, exported NASBs are 0 rated for SCT, for SCT at the point of removal.
Thank you. So for clarity, if a manufacturer moves goods from their factory or warehouse for export, SCT is going to be 0 rated, provided, and this is crucial, that the export is properly documented under excise controls. It is important to note that under the Excise Duty Act, there are very stringent rules that are required to be followed in relation to exported items, and TAJ is going to request evidence that the goods were exported and not diverted to local consumption. So, for clarity, they are zero rated, however, you need to have documentation to indicate same. I hope that is clear for our viewers. Miss Price, if I already hold an excise license for alcohol production, do I still need to register separately for NASBs?
Definitely, you will be required to register to produce NASBs.
All right. Again, just for clarity, if you are an existing excise license holder, you must register specifically for NASBs under the excise framework. The current excise framework, well, the previous excise framework covered alcohol and tobacco. NSBs are a separate category, and as such, you must update your registration to reflect the production of that particular category of goods. Therefore, TAJ will be adding NASBs to existing excise licenses to ensure that you are able to do those activities. Again, we are reminded, if you have any questions in relation to this process, you are encouraged to contact TAJ. We have an excise hub in relation to NASBs, and that hub will have all the details that you will need in relation to registration, licensing, and any updates that will be provided. The hub will also have precedents and letters in relation to the letter of intent that will indicate what's the content of those documents.
Yes.
Yes? All right. Next question. If I currently file SCT returns for alcohol products, is a separate SCT filing required for NASBs?
No, you will file one SCT return each month that will incorporate all the excisable products. So as it is now, amendments will be made to the SCT procedure to facilitate the NASBs.
Same return, just modified to include NASBs. Ms. Reynolds, is there a standard letter of intent, or do we compose it ourselves, is what our players are asking.
So manufacturers are encouraged to contact TAJ for the format. While the legislation does not provide any template for the letters of intent, TAJ can provide guidance on the format or what's the content of the letter of intent, as well as any onboarding documentation.
Thank you very much. Again, I take the opportunity to remind you, engaging with TAJ early is strongly encouraged to facilitate ease and compliance. Now we will take a question or two from the chat. The first question I see is from Rochelle Reed. Since the GCT rate is 15%, what is the rate for SCT? Ms. Reed, the rate in relation to SCT is 22 cents per gram on the added sweetener. The sweetened content, let me be clear, 22 cents per gram on the sweetened content of the beverage. Another question I see is from Travis Garnett. Existing manufacturers do not have to go through the complete application process. Ms. Price, do they have to go through a complete application process?
The application process, as we have, is that the GCT application Form 1 must be completed. Having completed that Form 1, then you now have the foundation to make an application to manufacture prescribed goods. And that process includes the completion of 3 steps. Firstly, the submission of the letter of intent, the completion of the Form E2, and the payment of the licensing fee. That is the procedure. What the fast track process has done is delayed an aspect of it, which is the inspection of the premises to be used for the manufacturing.
And that would be for the new manufacturers?
For the new manufacturers. For the existing manufacturers, no. They would have already have a system in place for manufacturing prescribed goods, and so the expectation is that they are already aware of what the standard is, and they will be abiding by those standards. Also, they would have already been in engagement with TAJ excise officers, and in some instances would have officers at their premises, so it is easier for them to transition under this new regime, unlike the new persons who are just coming onto the regime.
Understood. So for existing manufacturers, because you're already within scope of the regime and you already know your obligations, your registration will be amended to reflect C.
Okay. I'm seeing a question from Miss Judith. I think that's Hunt. Did I get it correct? If you produce a juice concentrate or syrups, do you need to register? So just for clarity, concentrates and syrups are not in scope. Only for those beverages that are within scope do you need to register under this regime. So again, let me reiterate, concentrates and syrups are not in scope. If it is that you produce a beverage that is captured under this regime, beverages that have the added sweetened content, then you would need to register.
The next question I see is from Ms. Salter. I do hope I'm pronouncing that correctly. It says, for new manufacturers who do not have an excise warehouse, does the SCT liability apply at production?
So SCT liability is not applied at production, but removal of goods for local consumption. So the SCT become liable, the manufacturer becomes liable for SCT when the goods is removed for local consumption. So remember, we have pointed out the requirement for licensing. Under the fast track process, the arrangement as it relates to the inspection is being reviewed and being developed. So to assist the process, you submit the evidence of the payment of the $5,000 for the licensing fee, the E2, which is the application to manufacture prescribed goods, the letter of intent, and that will be sufficient to get you licensed to produce your NASBs. That can be submitted at excise registration at taj.gov.jm.
Do I see any more questions? I see a question from Ms. Peart. What is required for importers of NASDs?
So for importers who are taking these beverages to produce in the local space, there are various technical sheets that will be required where you would have to basically outline what is within these sweetened beverages. So there are various technical sheets, and what I would say is that to provide further guidance, you can reach out to the Jamaica Customs Agency and they would be able to provide further guidance on the matter.
Thank you so much.
No problem.
And I do not see any more questions in the Q&A. Thank you so much for your active participation. Again, you're reminded, if you have any further questions, please reach out to us at TAJ. Please reach out to us at 888 Tax Help. Our customer service center is here to assist you. If you seek general information, you can find same on the Excise Hub on Non-Alcoholic Sweetened Beverages, which is on the TAJ website. And at all times, you can speak to any compliance officer or any officer of TAJ. We're all willing to serve you to ensure that you are able to meet the deadline for tomorrow, May 15th, 2026. I say again, the license grace period ends tomorrow, May 15th, 2026. Now, I want to go to some quick rapid fire questions. These are questions that have been posed. I've seen them in the chat. I've heard them in the social media space. I want simple yes or no answers from our panelists so you know absolutely and categorically what the answers to these questions are. First question, easy question. Does SCT apply to exported goods or those goods stored as stores?
No, they're not.
No. Are 100% juices taxable?
No, they're not.
Does SCT apply to goods manufactured before May 1 but removed after May 1?
Yes.
Remember, removal matters. Is a separate SCT filing required for NASB if you already file SCT?
No.
Does SCT apply to beverages sweetened at point of sale?
No.
Must existing excise license holders register separately for NASBs?
Yes.
Does SCT apply to concentrates, powders, and syrups intended for reconstitution?
No, they're not.
Is SCT self-assessed by the manufacturer?
No.
If a person is registered for GCT, do they need to register for SCT?
Yes.
Alright, there you have it. Simple answers to complicated questions. Please contact TAJ if you have any other questions. I see no other questions in our chat, in our Q&A, my apologies. Oh wait, no, I do see one or two. As we have some time, we are able to take those questions. I see a question from Mr. Joel or Miss Joel Arson. Do we need
Azan.
Mr. Azan or Mr. Azan, Joel, do we need to go through the licensing process if we already produce alcohol-based beverages and are currently subject to the SCT regime? Do we just simply add NASB's products to our current return? That would have been answered, but
Yes, I'll just reiterate that even though you're an existing manufacturer, you must submit a letter of intent of your desire or intention to manufacture NASBs. That letter of intent will be used to upgrade your licenses to include the NASBs.
thank you so
I
much.
hope that answers the question.
I hope so too. I hope that is clear. If it is you are already an existing excise producer or manufacturer of accessible goods, all you are required to do is update your current return to indicate the new set of goods that you will be producing. You do not need to do a complete registration process. You need to update the one that obtains in relation to your manufacturing process. The new manufacturers who are new to the regime, they're the ones who need to go through the entire application process.
Right.
JK asked the question, is there a monetary threshold for this SCT as is with GCT?
No, there's not.
No.
No.
There's not.
Categorically no. There's no threshold in relation to it.
Right. So once you are a manufacturer of prescribed goods, or once you desire to manufacture the prescribed goods, then it is required that you be registered. So the threshold is not of any significance.
I see. I do believe we do not have any more questions.
Yes.
That's it.
That's it.
That's
Wow.
it.
Yes, that is it. I want to thank you for your active participation in this session. I want to thank my panelists
Thank you.
who were able to very ably answer the questions that you may have. We understand that the regime is under review, and so it is TAJ's expectation to have multiple of these sessions where we sensitize stakeholders as to what they need to know on that day and in that time period. Remember, we're here to serve you even better. We're working together to serve you. And so, to wrap up our session, here are my key takeaways to you. All manufacturers, kindly review the products that you produce to ensure that they are within scope. That will determine for you what you will need to do in order to make sure that you are compliant with the requirements under law. If you are not yet licensed, begin your application immediately. You are required to ensure that you meet the obligations by tomorrow, May 15th,
Yes.
May 15th, 2026. Please ensure you engage with TAJ. We're here to serve. If you are an existing manufacturer, please ensure that you have sent your letter of intent to indicate that NASBs will form part of your portfolio. Please note that your liability would have arisen as of May 1, 2026 if you're an existing manufacturer. Finally, in all things, if you have any questions, queries, concerns, please contact TAJ to provide you with any additional guidance. We're here to support compliance, not merely to enforce it. Thank you so much for your time. Thank you, my panelists.
Thank you.
You're
Thank
welcome.
you.
I wish you all a pleasant afternoon.